Imagine if silver did go to 300. There's going to be a shortage impact here. And the stocks have massively underperformed the price of gold and silver. I've always thought that we should go back to 15 to 1. And our way in going to 15 to 1 will overshoot. So we might go to 10 to 1. And as you pointed out, the mining ratio is 8 to 1. The utilization of silver versus gold, maybe 10% of gold is utilized somewhere and 90% is just stuck in a vault. Whereas in the case of silver, I'm sure that 100% of all the mined output is used every year in whether solar panels or solid state batteries or you name it, healthcare, whatever, it's used. So it's a more useful commodity. Therefore, it might, in some sense, be more valuable than gold. Yeah. Gold's not valuable for the economy. Silver is vital. And of course, now they've made it a critical metal in the States. So I think the outlook and expectation is that silver will trade at 15 to 1.
The structural disconnect between silver's industrial utility and its current market price suggests an imminent, massive revaluation. Unlike gold, which remains largely idle in vaults, nearly 100% of annual silver mine production is now consumed by critical sectors like solar energy and solid-state batteries. EricSprott, a billionaire asset manager and founder of Sprott Inc., argues that this high utilization rate makes silver more vital to the modern economy than gold. He highlights that while gold is primarily a store of value, silver has been designated a critical metal in the United States due to its indispensable role in healthcare and green technology. This growing scarcity suggests the gold-to-silver ratio is destined to return to its historical 15 to 1 level, with a potential overshoot to 10 to 1 based on the natural 8 to 1 mining ratio. As silver moves toward a target of $300, mining equities that have historically underperformed are expected to close the gap aggressively, reflecting the metal's transition from a speculative commodity to a strategic industrial necessity. Now, we present the clips from EricSprott's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I've always thought that we should go back to 15 to 1. And our way in going to 15 to 1 will overshoot. So we might go to 10 to 1. And as you pointed out, the mining ratio is 8 to 1. The utilization of silver versus gold, maybe 10% of gold is utilized somewhere and 90% is just stuck in a vault. Whereas in the case of silver, I'm sure that 100% of all the mined output is used every year in whether solar panels or solid state batteries or you name it, healthcare, whatever, it's used. So it's a more useful commodity. Therefore, it might, in some sense, be more valuable than gold. Yeah. Gold's not valuable for the economy. Silver is vital. And of course, now they've made it a critical metal in the States. So I think the outlook and expectation is that silver will trade at 15 to 1. Well, first of all, their reserve calculation went from 1.6 billion silver equivalent ounces, just announced about 10 days ago, to 2.6 billion ounces. And it didn't even include some of the high-grade drilling that they'd done in 2025, serious high-grade silver drilling. So I look at 26 billion or 2.6 billion equivalent ounces, and I believe that's more than Hecla has. I believe it's more than First Majestic has. I think there's only one silver producer, it's a Mexican company, that has more than they do, and it's Fresnillo. And of course, Fresnillo hardly ever trades. I think there's a very small percentage of their stock that trades. So I think Hycroft has more product in the ground than anybody else, okay? And you know what? We're not selling it at cheap prices. We'll be selling it at 150 and 200 when we get there. So this is a very valuable commodity. The market hasn't yet learned to pay for gold and silver in the ground. I think they're coming around here. You know, you can tell by the trade that's going on that anytime somebody comes out with a resource now, and it's a good resource, the market understands it and reacts to it, which it didn't do till about 6 months ago. But you definitely see it now. In fact, one of the other things that we're seeing is we are seeing the small cap mining companies that, and I'm using the TSX TSX exchange, that gold is starting to outperform the other ETFs like GDX and GDXJ. Just the smaller little companies. The the penny horribles. And I can see why people would do that. Each of those guys has some amount of product in the ground. And, there's prices where everyone's product in the ground will be profitable. Imagine if silver did go to 300. I mean, wouldn't you love to have a silver resource? And I know I own a couple of those little guys that had 30 and 40 million ounces, and everyone would say, well, it's too small. Well, you know what? 40 million ounces at $100, that's $4 billion worth of silver. But hey, not that small.
No,
You
it's
can
not.
do well by that. So we see that happening. I'll tell you one other thing, Jeremy, that would be very interesting. And you would have gone through this. We are going to get into, and I don't know if I mentioned it to you the last time, but we're going to get into what I call the Nortell effect. And the Nortell effect is when the world decides they want to own something, as they did when they all wanted to own Nortell. So all these funds from around the world would buy Nortell. The weighting in the TSX would just keep skyrocketing, and none of the Canadian institutions could then thereby have enough because foreigners are buying it. Well, that's what's going to happen in the gold stocks. As everybody wants to buy gold stocks and they're predominantly listed here or the Canadian domiciled, there's going to be a shortage impact here. And the stocks have massively underperformed the price of gold and silver. There's a lot of catching up to do. I bet you there's 100% catch up to do without the price of silver or gold even going up. When these guys start reporting what they can earn at $80 silver and $5,000 gold for a quarter, I think the stocks are going to react very powerfully. Silver's going to 150. What is this going to be worth at 150? And of course, the number is always like 10 times higher than where it is. And I believe that. I mean, I believe it will be 150. I wouldn't even rule out it's going to be way beyond 150 because of all the things that are going on. Imagine if India actually starts buying this stuff. It'll be crazy. So, you put 150 on some guy producing a million ounces, all of a sudden he's making $150 million of profit. And you put a multiple on that now. Well, you have to tax it, of course. But anyway, the upside is just, it's magnificent.
It's wild.
There's many, many companies that could go up 10, 15, 20, 40 times with the endowment that they have with price increases.
The silver market is entering a phase where industrial demand and systemic scarcity are fundamentally re-rating product in the ground. With a mining ratio of 8-to-1 and nearly 100% of annual output consumed by high-tech industries, the historical 15-to-1 gold-to-silver ratio is expected to return and likely overshoot to 10-to-1. As silver targets the $150 to $300 range, the market is finally beginning to price in the massive value of silver resources. Significant upward revisions to reserve calculations, such as the jump to 2.6 billion silver equivalent ounces at major projects, highlight a growing endowment that rivals those of the world's largest producers. This shift suggests that even smaller mining companies with modest resources are becoming immensely profitable as the market recognizes the strategic necessity of the metal. This environment is triggering the Nortell effect, in which global fund demand for a specific sector creates a massive supply and demand imbalance in equity markets. Currently, mining stocks have significantly underperformed the underlying metals, leaving a 100% catch-up trade on the table, even without further price appreciation. However, once these companies begin reporting quarterly earnings based on $80 silver and $5,000 gold, the reaction is expected to be powerful. With institutional buyers and sovereign entities potentially entering the space, the upside for companies with significant silver endowments could reach multiples of 10 to 40 times their current valuations as the world scrambles to own real, productive assets. Let's get back to the interview.
There's no doubt there's a physical short squeeze going on. We can track the inventories at the LBMA. We track them on the CME. We can track them on the Shanghai Gold Exchange. So, for example, Shanghai today, they lost 10% of their inventories today. They're down to about 11 million ounces. So, I mean, that's almost zero for a country the size of China. So everywhere you look, you see issues. And to the point you're making about the CME and their technical issues, those kind of are suggesting to some of us who watch this that there's some shenanigans going on that are trying to get the banks off their short positions, because there's still a short position of, I think, roughly 500 million ounces of silver on COMEX. And I don't see the miners doing that. It's mostly banks. In fact, there was a delivery report today for the March contract, and the second largest person issuing the silver, physical silver, was the Bank of Nova Scotia. And they delivered about 5 million ounces. So those must have been 5 million ounces they were short. And I got to thinking, if you're short 5 million ounces and it was coming up on February 26th, isn't it wonderful that the silver price went from 120 down to 80? Think of the saving on 5 million ounces. I mean, you're talking a couple $100 million here. So that's serious stuff. And it's kind of surprising. Our banks have been pretty significant in these deliveries, by the way, whether it's BMO or Scotia, sometimes RBC, not as much as the others, but they're in the game. And of course, it's all these banks that thought they could control gold and silver, that they've lost control of gold. And I'm pretty certain they've lost control of silver here. And we also have some developments that are just mind-boggling today that I think will dramatically change silver and gold. And it's when the Indian government came out and said, we're going to mandate that mutual funds and ETFs in India can now own up to 35% of their assets in gold and silver. And this pool of assets is 385 billion. Well, that's a large percentage of that's a little over $100 billion. And of course, the biggest owners of gold and silver in the world are the Indians. And then they made one other important comment. We are not going to price off of the LBMA or the COMEX. We don't want to, we're going to use prices established in India. And of course, who's the biggest winner in the world with the price of gold and silver going up is India, because they own about 40% of all the world's gold in my mind. So they've, for a long, long time, encouraged people to own gold and silver, and they do own lots of gold and silver. So you can imagine, by the way, the new regulation starts on April 1st. So we're not going to see the impact yet, although certainly people like myself and your listeners will be vitally interested in knowing that as of April 1st, they can buy those products. So we'll see what happens. I don't think there's any developed country central bank buying gold, but there's lots of lesser known countries central banks buying gold, a lot of them. So you can see that divergence all over the place. And of course, the Indian central bank is buying. The Chinese central bank was a big buyer. There's just a bifurcation here of interest. But, if you're the guy who's short the 500 million ounces, i.e. the developed country banks, you don't want to see silver going up. You don't want to see gold going up. So there's been that negative bias. But as I say, I think we are now overcoming that bias due to the rest of the world sort of coalescing around gold and silver. The world's buying gold. The world is buying gold. How you wouldn't know that? You're not reading things if you don't know that the world's buying gold. So why would you not buy gold? So in fact, I heard that, not that I really like Jane Street being in SLV, but they've got might own 10% of SLV.
Huge position.
Yeah. And you can see when the gold stock started rallying at about 11 o'clock yesterday morning, when gold and silver were still down, but the gold stock started rallying. Some people are people are coming into this market for sure in big size. In fact, I heard about a manager in England who ran $1 billion fund. He just received another $1 billion. And I think, okay, bring it on. Like $1 billion, you try to put $1 billion into some of these stocks, particularly the junior or intermediate size guys. I mean, there's going to be some serious run up going on here. The people who had control of markets don't have control of them anymore. So the market can find its own proper positioning. I'm an investor. I'm looking for appreciation. So I can say, well, if the price does this, how much appreciation am I going to get? Okay, because that's what I'm in it for. And if you believe it's 150, say it, because you know what? You're not paying 150. You're probably not paying 50 in the price of silver for a silver company today. But it's trading at 80. And 50 is probably a number that even the majors won't use. And by the way, when I see some of these reserve estimates like High Cross, it was done at $3,300 gold and $36 silver. Well, the price of silver is more than double that. And the price of gold's up, 60% higher than that. And as you pointed out at the outset, as the prices go up, you can reduce your cutoff grade. Therefore, more ounces come into the mineral resource automatically. So the opportunity just gets bigger in two fronts, the price and the number of ounces you have. And I do my own work. Like I've always believed in 15 to 1. Well, 15 to 1 says $300, right? Okay, fine. So if somebody's saying 150, I can get it. And I can still think maybe 300. So that's your basis really for making the investment decision. And you're not paying for it. To think that you can buy it for, 5% of what its value would be at 300. You pay 5%. Wow. Wow. You're going to make 20 times on your money. That's a pretty good deal. You can't get that anywhere else, or hardly anywhere. You can get in the tech stock. Yes, you can for sure. Some guy develops some new software, or has a great chip or something. Yes, you can get that sort of thing. But this one, it goes across the board to all companies, right? All companies that have deposits.
The physical silver market is currently navigating a historic supply-demand bifurcation as Eastern powers dismantle the West's traditional paper pricing dominance. In Shanghai, silver inventories have plummeted to just 11 million ounces, a near-zero level for an economy of that scale, while Western banks struggle to manage a massive 500 million-ounce short position on the COMEX. This pressure is compounded by a paradigm-shifting mandate from the Indian government that allows domestic mutual funds to allocate up to 35% of their $385 billion asset pool to gold and silver. By establishing their own independent pricing mechanisms, India and China are effectively breaking the LBMA and COMEX monopolies, moving the market toward a reality in which physical metal, not paper contracts, dictates value. As the Nortell effect takes hold, global capital is flooding into a mining sector that has long been neglected. With institutional managers receiving billions in fresh inflows, the scramble for junior and intermediate producers is creating a massive run-up. Investors are increasingly recognizing that mining reserves calculated at lower price points are now being re-rated to the $150 to $300 range. This transition offers a rare 20 times appreciation potential as cutoff grades drop and ounces in the ground become exponentially more profitable. The era of bank-led price suppression is ending, replaced by a global coalition of central banks and retail giants coalescing around the ultimate store of value. Share your thoughts on his global shift in the comment section below. If you find this analysis helpful, please support us by liking this video and subscribing to our channel for the latest updates on the precious metals reset. Don't forget to hit the notification bell to stay ahead of the market. Thanks for watching.